In the news is the 10% credit card interest rate cap. Is that a good idea? Well, at first glance, the average person is going to say, I almost swore on that one. I'll just say yes. That is great because current credit card rates are around 23 to 24%, which I got to say they are kind of ridiculous sounding. However, when you dig deeper into credit cards and how they work, people have to realize the risk for defaults and the late payments, well, they're rather high.
Yeah, and then you have to understand is that banks that issue credit cards, well, I hate to say it, but they are in business to make a profit for their shareholders. They're not a charity that is just giving handout of free money. And if there's no profit to be earned, well, then there's no point in a business offering that service. And when you look at this, the current default rate on credit cards is about 3%, which means banks have to write off that entire balance of whatever that person owed. And we look at it kind of statistically, the higher default rates are unfortunately seen in zip codes with lower incomes and also for younger borrowers who got in over their heads. They didn't understand how credit works. And we talk about this. Unfortunately, there's not much financial education. Yeah. I don't know how you fix that, frankly. To me, it's like you got to learn how to budget and be on track. But unfortunately, people get in over their heads and it causes these issues. And if, again, they're defaulting on that, that is just lost money to the bank.
Don't they now in high school? I think you had a little bit. Like, didn't they do like a consumer class or something in high school? Or is that...
No, we did economics, but there was never really anything personal finance. Like, you don't know what a standard deduction is. I bet you most people across the country don't know what a standard deduction is when you file your taxes.
Yeah, Sarah and some of them shaking her head. No, I don't know what that is. Yeah, so and it is kind of a shame, and I don't know how you even get that education because it's just. And I've heard of people saying, "Well, I didn't know there was interest on a credit card. I just thought, I just put on the card and." I don't know where they think it came from, but there is lacking financial education in our country. And I guess it should come from parents, but if the parents don't know, they can't pass on down to the children either. So, but if the 10% cap on credit cards goes through, it will hurt people with lower incomes and those that have lower credit scores because banks, well, would no longer be able to be profitable on those accounts and they would stop offering credit to those people. That's what they have to do. It would also affect many across the board as you could see a reduction, if not elimination, of points and cash rewards on credit cards, which, well, that'd be very disappointing for many. I mean, we talk about, pay your card off every month, collect those rewards, collect those cash rewards. That could go by the wayside because banks say, well, we just can't make any money off credit cards.
Yeah, I know. And they're a great tool. You just got to know how to use the tool properly. And that's kind of why, in my opinion, it's better to have the higher interest rate on credit cards like we have today as it broadens the pool of people, again, that can access that particular tool. But unfortunately, people need to use some self-discipline to not get in over their head and make sure they can pay their payments and hopefully not carry a balance on the card. If they can do that, they pay no interest and also can benefit from cash back and other reward programs. And people think I'm crazy. I always tell people the APR when you're looking at a credit card, it should have no bearing on your decision if you should go with that card or another one. It's like, oh, that one's 23%. I can get one for 10%. It shouldn't matter because still, to me, 10% is not a good rate for the average person to borrow at. What really comes down to is what offers the best rewards, because if you're tapping credit card interest, that's just not a good financial strategy, no matter what the APR is. And it sounds crazy. If the APR was 50% on a credit card, I'd still take it because I would never use that carryover of the interest.
Yeah, it'd be great if they said, okay, the APR is 50%, but we'll give you 3% cash reward. I'd take that in a heartbeat, because I'll never carry. I can't remember the last time I carried a balance on my card. And sometimes, I'm doing very well now, but when I was younger, there's times like, gosh, hard to pay that off at the end of the month, but I got to do it because I did not want to pay that credit interest they're going to charge. And also, too, many times you get down that rabbit hole, it gets worse and worse. So you've got to control your credit. You've got to be disciplined. We talked about, too, on the banks, and we discussed that the total credit cards right now about $1.2 trillion. Now, if you start doing the math on that, saying, okay, that's a lot of credit card debt. If the delinquency rate is 3%.
Default rate, right?
Default rate. Yeah. Oh, I'm sorry, default rate, correct. Default rate. You're talking about $36 billion that has to be written off every year. Now, that's between all the banks and so forth, but that's a big problem. And also, too, don't forget that it's not just free money for the banks. They got to do their advertising. They got the buildings that you go into to open it up. They got services with labor. You got that credit card. You want to call somebody, hey, what's going on? I do that all the time, my credit card company. Cost of the funds. The money doesn't fall from the air. They've got to take that money and loan it out to you. So they got to borrow the money. They got to come up with the money. They got to pay interest to the depositors, whatever it may be.
Don't
and
forget about fraud protection as well.
Oh,
I mean,
right.
they protect against that. Or I'm sure you've had this happen where I've had a fraudulent charge. The credit card company pays that for you.
Good point. Yeah.
I mean, that's a cost to them as well.
Yeah.
So, I mean, you could lose. It's like, fine, we're not going to be able to charge interest. Well, we're not going to cover fraudulent expenses anymore.
Yeah, not your fault. Like, what? I didn't do it.
I didn't do anything.
And then also, too, remember, credit cards have no collateral. So that means, like, if you have a car loan, well, at least then take the car and get something back. Credit cards, and I come and take, well, I ate at, Ruth Chris last night, so well, give us your meal back, I mean, you can't do that. So that's why, we understand it. I want people to understand, too, yeah, the 10% sounds great to the uninformed. When you think about it, it could wipe out all credit cards to where, like, banks, and again, you kind of apologize. I'm sorry that they need to be profitable, but that's what's made our country, is businesses being profitable and hiring people and paying dividends and investing. I mean, it's just the way our society works, and can't be a charity because I guess it'd be a socialist, communist economy.
Yeah, and it could hurt things long term. Obviously, credit cards are great for many, and unfortunately, it creates learning and think experiences for some people. But if you can learn how to utilize it properly, again, long term, it's a great benefit to you. But again, there is that, I think, learning that needs to occur for some.
It's like a knife. A knife can be very sharp and cut your meat, or you cut yourself, it hurts. So you got to know how to operate that knife and the credit. So